Hello and good morning, everyone. It's Friday, January 30th, and welcome to today's episode of 7investing Live. This is our live stream interactive event where we put a spotlight on several of the stock market's most intriguing opportunities. My name is Simon Erickson. I'm the founder and CEO of 7investing. You can check out all of our stock market opportunities right at 7investing.com. We do offer a 7-day free trial that gives you exclusive access to all of our premium content, all of our monthly recommendations, all of our monthly best buys, and everything that we offer. 7 days for free, 7investing.com/subscribe if you're interested. My goodness, I'm excited about today's show. This is an interesting one. This is a high-tech, forward-thinking show we've got here today. We're calling it the Eyes of AI. And I'm once again just privileged to have our guest be Emmett Savage. He's from MyWallStreet. He's also the CEO of Prophet. And we're going to be talking about some interesting opportunities in autonomous robots and also the sensors that they're being equipped with here today. But Emmett, I think I speak for everybody on behalf of everyone watching this show. Welcome back to the 7investing live stream event today.
I'm delighted to be back, Simon. Thank you so much. I didn't blow it in the first one, so I'm like, wow, you're actually going to have me back. I'll take it. Thank you so much. I'm delighted to be here.
You're one of the most innovative investors that I know. And so when we have these conversations, I'm truly delighted. I really enjoy them because we're kind of looking at where the future is heading. And, we talked about the EVTOL industry last time. Mm-hmm. This was air taxis. There was some really cool stuff. You talked about vertical aerospace as a stock in that one. Today, we're going to be talking about sensors that are being equipped on autonomous robots and machines. And this is going to be an interesting one to talk about too. Ouster is the company that we're going to be discussing in a little bit. But let me set the scene for this first. I want to talk a little bit about this $70 billion global market opportunity there is for these digital sensors that are going on machines and helping them understand the world around them. First, Heather, let's go ahead and put up the market opportunity just to kind of talk about where these are being used. It's a $70 billion global TAM, total addressable market, for what we're calling physical AI now. It's kind of helping machines understand the world around them and interact with them. And we've seen a few iterations of this, Emmett, in the last, call it decade or so. It seems that at first we kind of had iPhones that, they were equipped with InvenSense sensors so that they could actually understand where you were and how you were moving, or maybe how fast you were moving, GPS coordinates, things like this. And then it seems like we kind of went into autonomous vehicles. We started talking about LIDAR on tops of vehicles, or maybe Tesla's, computer machine vision that it was equipping for its vehicles. And now kind of we're expanding this even farther, where not only do we have devices making sense of the world around them, but they're interacting with the world around them too. There's one more slide I wanted to show, which I thought was really interesting. And then I'm going to hand it to you, Emmett, because you know much more about this than I do. But I was particularly intrigued with smart cities, where you're not only putting sensors out there to monitor traffic patterns or even people that are walking through them, but you've got AI that's trying to make sense of a lot of these patterns. And so you can do kind of things like real-time traffic management. You can actually do crowd analytics, for security. Are people starting to cause problems in certain areas that you might need to dispatch the police to? Logistics. There's different things that are going on. This is perhaps in some ways a controversial or a sensitive subject in America, but I know for a fact they're already doing this in China and several other countries of the world. It's just interesting to see, as we're thinking about the modern devices, the modern machines, and even the modern cities, they're able to interact with their environments in many, many different ways these days. And I'm going to hand it to you on that, Emmett, but it's really some cool stuff going on in the world out there.
Oh, you said it, Simon, and thank you for that introduction. And I usually like to explain to people where I encountered a business that I went deep into and ended up researching and falling down the rabbit hole, which occasionally you realize I have to abandon. And in other instances, as you well know, you realize, I think this is something that is going to change a portion of humanity and a portion of the world. And I think Ouster is on the front foot, as they say, it's always day one. Today is the first day. We all know, we all wake up, well, what happened up until this point is history, and this is day one. So is it a good day one for Ouster? And in consideration of how did I encounter this business, you touched on it when we were chatting earlier today, Simon, about how last August, in collaboration with the Irish aviation company Aer Lingus, there was a college football clash in Dublin, Ireland, where I'm broadcasting from. And Iowa State College came to Dublin to play Kansas State in a big football game, which was known as Farmageddon. I'm sure that's a
We're
familiar
talking
term.
American football, right,
We're
Emma? We're
talking
not talking
American
about,
football,
okay.
exactly.
Just so I can calibrate my
College
American brain.
football.
Okay, gotcha. Okay.
College football, American football. There's a great game happens here every year in our local Crow Park, a big stadium here in Dublin. And at that time, I launched the inaugural InvestiCon, which was a small get together of like-minded souls like you and me, where it was held on the very historic floor of the Irish Stock Exchange, and we had experts come in to talk about all matter of investable assets. Well, really only three types. One, growth stocks. Two, collectible whiskies, because that's something we do. And honestly, that is a conversation unto itself. Not for now, but if
They
somebody
go well
pitches you
together.
100,000, if someone pitches you $100,000 bottle of whiskey, your first reaction is, come on. And then they say, because I think it's going to be worth $1 million in 7 years, you're suddenly all ears, right? But anyway, and then the third asset class that we spoke about was AI and all things AI, which we separated somewhat from growth stocks, although we know one is a subset of the other. And we had experts come in to talk about those various asset classes, and it was really great. And I might say, if any of our audience here are interested in details for the event we hold in 2026, just drop an email to investicon@mywallstreet.com. But that's another conversation. Anyway, our AI segment guru was somebody who we both know, Simon, a guy called Eric Bleeker of 24/7 Wall Street, and he identified 6 AI stocks because he has a podcast that's particularly dedicated to all things AI, and he pitched 6 stocks that are positioned to crush the market. Excuse me. So there was one that was of particular interest to me. I researched all 6, and as I said, that rabbit hole can lead to places where you hit something you're not too comfortable with. But I really did like Ouster, and what they do, is you very eloquently explained, they make the seeing eyes for AI. And a bit like when last week we were talking about EVTOL, where most rational thinkers realize now that electric powertrains are going upwards as opposed to along the macadam of the road. What we all realize is that AI is a mega movement that is now not only permeating the software we use, but the real hardware of the world, whether it's self-driving cars to other objects that we haven't yet, let's say, married with AI in our minds. But when you think about it, you realize that this is a mega movement in humanity's evolution. So as I said, Ouster makes the seeing eyes for AI, and I'll explain that traditional LIDAR systems rely on little spinning mirrors and mechanical components. So if you were to look at a LIDAR set, it has a lot of moving parts. And you said about the evolution of these things. There was once upon a time a little gyroscope inside inside most devices, like the initial iPhone MEMS, they were called. But a lot of these LIDAR, LIDAR is a detection system which works on the principle of radar, but it uses light. And Ouster's breakthrough is true solid state LIDAR, which means no moving parts whatsoever. And that's really great for 3 reasons. And the first reason that no moving parts is good is reliability, less chance of mechanical failure. The second is manufacturability. It's easier to make something that doesn't have moving parts, which by their nature have pivots and hinges and all that kind of stuff. And camera-like architecture can be produced at scale using semiconductor style processes, which drives costs down over time. And then the third advantage is, what was it again? Flexibility. So there's a huge flexibility. So the same core architecture that can be adapted across short, mid, and long range applications without reinventing the product each time. So I have a couple of slides. I don't like to bash people down with too many slides, just enough. Okay, so I'm going to do a quick screen share. If that's
Just
good
one
with you,
moment on
Simon.
that. Just a second before we get to that, Emmett. I do want to get into Ouster in 2 seconds. Thank you for perfectly setting the table on what's going on out there. As we wrap up the 10,000-foot level discussion about what's going on, I did want to chime in with a couple thoughts, and I want to talk also a little bit about the cool stuff that you're doing with Prophet, and then we're going to get in the second part of the show to Ouster. Thank you for introducing that one. But I think that what we're talking about here is these are very specialized technologies. This is a foundational technology that's going to find itself into a lot of places, and it's going to be the use cases is where companies are going to make the money off of this, right? You mentioned MEMS, microelectronic mechanical systems, right? That was something that InvenSense was originally using for geophysical applications. They were using it downhill when they were fracking, other things that were for geophysics necessary. And then they kind of were making a lot of money at high profit margins with that. They wanted to get into the iPhone and became much more competitive and difficult, especially for the company that eventually got acquired. And then we also saw Mobileye. Mobileye was equipping vehicles, self-autonomous vehicles, for making sense for the lane shifting, making sure that it was making sense of what was going around it. Got acquired by Intel, now actually being spun back out in the public markets again. This is another company that used a highly specialized technology for an application and a use case that made sense. And now it's going to be interesting to see Ouster as they've taken this to the next evolution, right? Physical AI, we're calling it now. We're not just sensing things. We're not just making sense of our surroundings. We're interacting with them. Certainly specialized, certainly foundational, but I'm excited to learn more about how they're using this. We've seen companies make a lot of money off of this in the past.
No question, Simon. I mean, that is the thing. And the original peripheral device was the human eye.
Yeah.
We had this beautiful thing built into our heads 2000 years ago, and now machines are catching up.
Absolutely. And, it's been 6 years, 7investing back in 2020 interviewed Colin Angle, who is one of the really
Oh,
the godfathers of this
I
space.
missed that one. That would have been cool. I have to
Yeah,
go
he was
back into the annals of the library to watch that. I've always been a fan of Collins.
MIT robotics engineer, right? Also known more commonly as the CEO and founder of iRobot, and he was a guy that was really early on building what he wanted to be, kind of what Elon's trying to do, autonomous robots. And then he, of course, ends up being known as the godfather of vacuum cleaners because it's the Roomba that's going around that iRobot became known as, right? It was the little
Yeah.
vacuum that went around your house. But he told us, he said, I never thought I was going to be known as the vacuum cleaner guy when he started doing, his initial academic research. It's just interesting to see how the market directs you, where the money is for the things that you're developing. And of course, that's of interest for investors is where are the revenues and where are the profits at. Speaking of where the profits are at, let's talk about profit. Let's talk about your company here, Emmett. This is something that we've got a partnership going on. You and I have known each other a long time. You're doing some really cool stuff out there using AI, not for vacuum cleaners, but for the investing industry. Tell me a little bit about Profit.
Profit in a nutshell is the Don't Make Me Think investment service. It's very, very simple. You buy the 10 stocks that are currently live on Profit, and we will email you in 4 weeks and say, sell these two and buy these two. And once you just, or three, it depends, it changes over a couple of stocks every 4 weeks. All you have to do is stick with it. Why would you stick with it? It has absolute face melting track history, specifically 19.9% compounded annual growth rate, which I'll show you what that looks like in a few moments when I pair up my slides. As you said, Simon, we have been friends for very many years now, and we have a very special exclusive offer only for 7investing listeners, and that is where Profit is retailing at $1,000 a year. We have a $500 off offer for your listeners, only good till next Thursday evening. So what are we at? Friday now, so 6 more days,
Yep.
and then we're going to knock it off. And the one thing about Profit is once you lock in a price point, you keep it forever. So we have a very special product that is so simple. And what's great is that you don't have to worry, is my analyst keeping an eye on this business? They pitched name a business to me 10 years ago, and are they still watching it? Do they still like it? Profit is constantly updating every 4 weeks, and if it's still on the list, it's been evaluated against 60,000 other potential stocks. And it's powered by AI. I'll give you a lecture some other day on how we built it, because it is some tech stack in there, but it's beautifully simple to use. A child could use it, but as I think I said on your last show, we're not allowed to tell kids to invest. They should.
Yes, they should set up Profit. It's got
Yeah.
the returns for it. But behind that, Emmett, I think I'm very selective about who I want to partner with and promote out there. There's a lot, but this is when I actually a big fan of what you're doing, because I know that tech stack and I know how much work you put into this. AI has found its way in various ways into our investing industry. It's typically just
yeah.
arrows going up or arrows going down. saying buy or sell based on charts. You have been much more comprehensive than that. You've actually kind of codified a lot of the academic research around disruptive innovation and different techniques to investing into this approach. I've used it. I've seen what you've done. I'm a big fan of it. Let's put that website up one more time. useprofit.com/7investing is where you can go and check this out. And again, like you said, Emmett, man, I appreciate you coming through for me and giving my audience the exclusive deal, not available anywhere else. And you're going to lock in the lowest price possible what you can. And it's never going up if you lock it in here today.
Well, the pleasure is mine. And I am a physicist by profession. And actually, Prophet was built 17 years ago, but we only productized it a year ago when it was proven, not with back testing, but with real testing. And when we migrated everything onto an NVIDIA chipset, we went, wow, that's a wow moment, because previously the amount of crunching that our processors were doing, it was just too slow. But now we have an incredible product, truly incredible. And the vast majority of my family's net assets are being managed via the Prophet methodology. It's the don't make me think service. And the truth of the matter is, we could sell it to a hedge fund, but we're actually getting more kicks out of doing what we're doing here. And hopefully your listeners will subscribe, 50% off, and they won't be disappointed.
I'm glad to promote it. Once again, useprofit.com/7investing if you do want to check it out. Only available for 6 more days. And again, exclusive offer only for our 7investing audience, not available anywhere else. Let's bring it back to Ouster, Emmett. You know, I know you've got a presentation. You mentioned you got some slides. Let's jump into those and see what you're
let me hit you with this. So, okay, I've only got, as I said, we're going to just run through a couple of slides. It won't take too long. That's where I am, everybody, Dublin, Ireland. So find yourself on the map and you're probably nowhere near me. Okay, so, well, we've already covered this really about what they do, and I've already spoken about that. So I'll jump onto this, but this goes a little deeper into Ouster's the seeing eye of machines. And physical AI is about machines understanding and interacting with the real world. In other words, they have perception, machines that have decision making capabilities and action. And I suppose the most accessible way to picture that most of us have seen in some form of media recently is Tesla's Optimus robot, where you realize that this machine is acting like a human being. It has perception, decision making, and action. And LIDAR sits right at the perception level of machines. It feeds machines precise 3D spatial awareness in real time, just the way our eyes serve our brains, serve our bodies. If you're lifting up a cup off the table, you do it thousands of times a year, but there's quite a lot of science going on there, as we can only imagine. And now it's being brought into the inanimate world, into machines. So Ouster's edge is vertical integration. They designed the sensor, they designed the digital architecture, they embed the software. So we have a hardware and software squashed together in that one device, and that combination improves the performance, it reduces the cost, and it shortens the development cycle for customers. And as we can see from this slide, they've over 1,000 customers, they've shipped over 100,000 sensors, and they've hundreds of employees globally. So it's not a startup. This is a business that is no longer in the experimental phase. It's moving into the rollout realistic phase, and it's being deployed today. And as you said earlier on, Simon, it's looking at a $70 billion total addressable market across automotive, robotics, industrial, and so on. I'd have to see the slide to perfectly remember. Now, this is really interesting because I'm pretty sure most of your listeners know Moore's law, and Ouster's sensors improve the same way as traditional quote unquote traditional chips do. So as semiconductor technology advances, Ouster can pack more and more processing power and performance into their tiny chips at lower cost, which is Moore's law by another name. And each chip generation shown here on this slide represents a step change, more reference points or per second, higher fidelity, better signal processing. So simply put, tech just gets better. things get smaller, faster, easier, more higher resolution. We all see it, whether it's our phone, our TV, you name it. So that's no different for Ouster's tech. And this is where their software leverage comes in, because as hardware improves, as per the graph there, the software attached to that hardware becomes more valuable under several different headings, such as perception, analytics, and indeed safety, to name just three, because we know safety is key in this iRobot world, the Isaac Asimov novel. We want to make sure that these machines are acting and reliably safe. And that's how margins should expand over time. So this dynamic, the Moore's law plus software, is why the business model has potential to look very different in just 5 years than it does today. So this, you already put this one up, Simon, and it answers the question: how big is the market opportunity? And what kind of strikes me about this piece of information is less the $70 billion market opportunity, because those of us who are well used to looking at investor relation decks such as this one know that it's good practice to put a big number up the front. You want your audience to realize you're after something big. But what I took great, I don't know if the word joy is, but it's somewhere between joy and excitement, is the diversification of revenue streams and that giant opportunity. Robotics, industrial automation, smart infrastructure, automotive are all independent growth vectors. So we love diversified income streams in our businesses, whether if it's B2C and you'd rather have a company with 1 million customers opposed to 1,000. Well, this is analogous to that. This has different growth vectors, and some will move faster than others, as logic would dictate, but they don't all need to work at the same time. And that diversification, I suppose it lowers its existential risk. So Ouster is playing several hands of cards at the same time, and each category is driven by a basic trend, which is replacing human perception with machine perception. And we've all seen that creep in over the last year, 2, 3, and we can all extrapolate that forward to know that machine perception is just going in one direction, which is up. And Ouster are very much emerging as one of the most important players in that market. Now, robotics. This is the first thing. I won't labor it but I'll just give a flavor of all these different verticals that they're going into. It's the earliest and most tangible one. Last mile delivery, robots, drones, mapping, inspection systems. They all need really good spatial awareness. You don't want your burrito delivering robot to run over your toes as it drives off. Like, we want to make sure our robots are behaving well. And labor costs are rising everywhere in the Western world, whether it's Ireland or the US or Canada, you name it. Everywhere labor costs are going up, and logistic costs are constantly under pressure, and sensors can reduce accidents, improve routing. There's so many different arguments for robotics, and that's a conversation unto itself. And the photo there, actually, interestingly, from the Ouster deck, is from another publicly listed business that I was investigating and decided to pass on, but it's worth mentioning. It's called Serv Robotics. And in their IR deck, they made a really good point, which stuck in my mind, and was, why have a 2-ton car deliver a 2-pound burrito? And I thought, that's so true.
Right.
Like, isn't it crazy, a car pulling into your drive with a burrito? So they've delivered. They're manufacturing those tiny wee robots with kind of eyes to deliver the burrito, and it arrives at your door. So I guess my point is that robotic autonomous robots are creeping in everywhere, and it's a single robot needs multiple LIDAR units for redundancy and coverage, and that's just one of many, many, many examples. In the industrial market, I'm not going to talk about this too much, but because it's far less glamorous, it's a bit snore. Next slide, but it is really important. It's arguably more durable. Forklifts, tractors, mining vehicles, construction equipment, they all operate in dangerous environments. Everybody, whether it's a farmer knows they're dealing with dangerous heavy equipment, or someone working in a factory has the same awareness. And accidents are expensive financially, reputationally. They have lots of things, nobody wants them. So LIDAR enables collision avoidance, it enables automation, better safety systems, and it's a classic boring but big infrastructure spend. If we move on to, I think the one you mentioned a few months ago, Simon, which is about smart cities and the cities seeing in real time traffic intersections, perimeter security, crowd analytics. And you rightfully said, well, we'll back off there. And that's a different conversation, but it is also a fact of technology that we now have tech that can look into a crowd and pick out people. And everything else in the category needs persistent, privacy-friendly sensors, and LiDAR is uniquely suited because it captures geometry, not identity. So so that is a very key differentiator, where we all, like, most people don't want to think there's a camera watching them walk into a football stadium and out. We accept it, as most of us just accept it's probable. But the nice thing about LiDAR is it's about the geometry. And once installed, it's worth saying that these systems, they stick. Infrastructure budgets are long term. Replacement cycles are pretty slow. Once it's in, you're like, I don't want to have to do that again for a while. And that creates a recurring opportunity over time. And this is a steady government-driven market. Then the final bit in their TAM, the $20 billion bit, is the one that I think we're all most familiar with, and that's cars. And Ouster is targeting ADAS and commercial fleets and shuttles and robot taxis, wherever economics can make sense. So before and this is the last slide I'm going to present. Well, second last slide, actually. I think of another one after this. And finally, this is I think this is especially important, because a bit like vertical aerospace EVTOL that I spoke about last week, where I said, look, these guys have really projected some hyper revenue. EVTOL was, vertical was going from ostensibly no revenue now to something like 11 billion revenue in 2035. Well, look at these guys, what they're saying. Top left-hand side, they're saying that revenue has a long-term growth of 30 to 50%. Now, practically, I think what they mean by long-term is probably 3 to 5 years. I would call that more medium-term, but in the fast growth market that it is, that, hey, look, who's going to turn their nose up 30 to 50% revenue? And it's going to scale out its current base. A few important nuances to note are the growth is expected to come as customers move from pilot projects into volume deployments, especially in industrial automation, as I mentioned, and robotics and the other areas we spoke about. Also, hardware businesses like Ouster, they do not grow in a linear fashion. You often see slower growth earlier, and hence the tech is being developed, the pilot's being done, people are figuring it, like I did, there's a figure it out stage. And I think that is almost, there's almost an autobiography in every revenue chart of a business. If you're to look at a company's revenue growth or contraction, it in its own tiny little way gives a tiny wee little autobiography of the business. And that's why I think it's nice just to finish on this. So this is the annual revenue of Ouster. The final bar on the right-hand side ends in September 2025, which was the most current date at hand, true fiscal. So that's a nice shape. We love that, right? And when you look at the share price graph, which I don't have at the minute, just to give everybody some kind of notion, it's a kind of a $1.5 billion business. It's about 1.6 billion market cap. Share price like 27 bucks the last time I looked, unless something happened last night. So that's Ouster. I think, do I have anything else? Oh, yeah. Hey, look, folks. Profit. Well, I have the mic. Sorry, Simon.
Keep going. I'm with you.
Keep going. Here we go. Whether you like it or not. Profit. I had so here's Profit's performance. Sorry, talk about a gear change. Sorry, everyone. This is Profit's performance. In the top left-hand side, you can see its performance over the last 5 years. It went up 133 5.5%. Its 10-year performance, it's up 460% almost. And its performance as of this morning is up 1,781% since inception, which was December 09. That's when I sat down to program this. So you can see the annual performance report on the right. Only one down year, which was my eyes are dim. I'm wearing glasses, but it's 2022 is the only down year, and the rest, including this year, short as it's been, are well in the green. So profit is something that I'm so thrilled and delighted to partner with 7investing for the only 50% off deal that we will ever do. So is that my last slide? Oh, a nice graphic. There we go, folks. Profit is usually $1,000 a year, but for you it's $499, and only too delighted to be partnered with 7investing for this.
Well, that was fantastic, Emmett. I noticed the inflection point not only for profits, investment returns, but also for Ouster's revenues that they're getting out there. I want to put on my analyst hat on this too. I want to be objective, and talk investor to you, because
Yes.
I think that when you got companies like this, you've got the two tiers of PR. And I'm going to trademark this. This is a great thing to remember. I've never heard this before, but I'm going to call it the two tiers of PR. The first tier, your tier one, is PR for press releases, where if you're working with a tier one customer like an Apple or a Tesla, you're going to get a lot of attention from that. You're going to go out there and tell everybody, hey, guess what? We've got our
Lemonade. We're now in the Tesla stack,
That's going to be right on the front page of your website. You want to talk about that, but you're actually probably not making a lot of money off of those customers. They're going to give you dirt thin, super low margins on those because they're Apple and they're Tesla. But so it's the tier two is where you're going to get the other PR profit. You're going to get your profit from the tier two customers that are smaller volumes, higher margins, but they're following you into those large customers because they want to keep up with Tesla. They want to keep up with Apple. They don't want to fall behind and have an inferior product. So it's kind of, these big deals are the laying the groundwork for these businesses. Once you start getting some big wins and some big contracts, you start really taking off. And I want to share a real quick screen as we kind of finish up this conversation, but I do want to, you put up the great graphic that I wanted to compliment. As we talk about how this business is growing over time, you said that they have kind of a long-term trajectory goal of 35 to 40% gross margins. You can see that's increasing there, right? From a couple of years ago, December 2020, they're at 8% gross margin. Then you're in the high 20s. Today, you're at 43%. That's the blue line on the top. The orange bars are the revenue growth, as you mentioned there, Emmett, growing very, very well on the top line. They're able to command price points that are supporting a 40% gross margin. The next step of this business is going to be getting bigger and larger contracts and get a little bit more surprise so that you can get that purple line, the operating margin, up into the green again. It's going to be interesting. This is a tough road to plow, pun intended, for a company that's going after self-driving cars. But I think that once you've got a good start and you got the good management team that's pumped up, you start winning some deals. This is definitely worth a spot on our investing radar. Once again, pun intended.
Actually, good one. But I do not. Do I own shares in Ouster? No, not yet. They're still hot on my watch list, and but I do own shares in Vertical. But I would equally say they're both quite hot risky, because it's not the road. The road hasn't been plowed, as you so eloquently said.
We got to keep rolling with the puns. You're doing too good with this.
Yeah. So to our listeners. Hi. What I was going for here, Simon, when you gave me the honor of saying, hey, come on over and talk about a couple of businesses, I tried to pick three that I couldn't see had been discussed with 7investing before. So I'm not saying this is my all-time favorite investment. That honor would possibly go to Lemonade at the moment, but I would say I think these guys, I don't want to say we have an NVIDIA in our hand. That's crazy speak, but we might be looking at one of the ultimate building blocks of seeing machines.
I love it. And Emmett, thank you, by the way, for introducing. We've now talked about two companies that have been off the radar of most of our investors so far. We're going to have a third one next Wednesday as well. But this one was Ouster, OUST. I think we're going to call the program there as we come up on the midpoint of the hour. But if you want to follow along with that one, I think it's a really neat company, really a cool space for a guy like you and I. Emmett, we love to nerd out over the science of these kinds of things, but also as an investor, there's money to be made in these as well. So check out Ouster, check out Physical AI, and computer vision. Some cool stuff going on out there. Emmet, we're going to chat about one more next Wednesday. That's going to be February the 4th is when we have our next presentation. On Groundhog Day on Monday, I'm going to be talking about the space where my next 7 investing recommendation is participating in. So I want to sneak that in. You know, who knows if Puxatawny Phil is going to see a shadow or not on Monday, but we're going to be talking about some good new opportunities for 7 investing. Emmet, thank you very much for being on this show. I look forward to talking to you again next Wednesday.
Good to see you, Simon, and speak to you Wednesday.
And in the meantime, check out Prophet. Again, that special exclusive offer we've got with Prophet. Use prophet.com/7investing if you want to get set up with that exclusive offer. It's only available for the next 6 days, so go check that out as well. We'll be back on Monday. I hope that you stay warm. It's going to be another cold wintry weekend out there for you. We'll see what Phil says when he sees his shadow on Monday, and we'll talk to you again for the next 7 Investing Live on February the 2nd.